A very good morning to you once again. This is the Smooth Breakfast here on Smooth 98.1. Love music, love life. 32 minutes past 6 a.m. On a brand new Monday, a brand new week, 7th day of July, 2025. You are listening to Business Express brought to you by IntoSwitch. This is where we get to dive into the world of business and business related matters. My name is Ayokunmi. Great to have you join us for the next 15 minutes. We'll be talking about the issues in the business world. And today, specifically, we'll be looking at the second half of 2025's outlook for Nigeria's economy. That is what it is all about. Just to give you a backstory into what it is that we'll be discussing specifically. So it's half year 2025, and Afrinvest Research have released a new report looking at the second half of the year. Now, it covers the globe as well as Nigeria. And we will be diving in with our guest today in the person of Damilare Asimiyu. He's a macroeconomic strategist at Afrinvest Research and Consulting. Very good morning to you, Damilare. Great to have you on the show.
Thank you for having me here. Good morning to all our listeners across the world.
Yes, indeed. To all our listeners across the world, you can join us on the show as you always do by sending your messages in on WhatsApp. The number is 0809 444 0981. 0809 444 981. That is the WhatsApp number. We're also on YouTube. We're streaming live at Smooth 981 FM Lagos. Smooth 981 FM Lagos. All right, Damilare. Now let's just get into the meat of the matter here. Now, the report in question was called Beyond Silver Linings. Why exactly was it given that particular name? Interesting name, I have to add.
Yeah, thank you once again for having me on the show. Yeah, so the underlying reason for the theme of our report, Beyond Silver Lining, Statistical Gains, Social Strain, we're just trying to remind policy makers, leaders in Nigeria that Nigerians need more than a statistical gain. They want to feel the
Mm,
impact of everything that is being done. And invariably, we're actually trying also to preach the central message of economics as a field of study.
right.
Economics is not all about growth. What economics is mostly all about is inclusive growth, inclusive and sustainable growth. Now, a country can have growth that is exclusive. And
Huh.
if you look at Nigerian macroeconomic narrative post 2014, the reality has been more of growth that is exclusive. In fact, at some points in the journey over that about 11, 12 years, Nigeria was even in a state that would be described as stagflation. You know, growth became elusive, inflation was at record level. Now, we had a new government coming in 2023 with loads of promises to transform the economy. But of course, we are not surprised that initially there were a lot of negative knock-on effect that emerged from some of the policy rolled out from the government. And typically now, you know, many of the people in power will come and speak to people and tell us that we are beginning to see silver lining. Now, yes, we are seeing silver lining, which is that some of our macroeconomic statistics are beginning to switch positive. But
Okay.
how far is that impacting the common man is a question we are trying to, so that we should look beyond the silver lining, because the silver lining in now is that in 2024, Nigeria economy grew 3.4%, faster since 2021 after the pandemic. In fact, the pandemic hold, the 2021 was more supportive from a base effect because the economy contracted in 2020. So if you
Okay.
remove the contraction of about 1.9% experienced in 2020, the real growth, so to say, in 2021 was still about 2%. So definitely the 3.4 growth in 2024 was the fastest since we left the 6% level in 2014. But if you then dig deep rather, analyze that growth in the context of the effect on the welfare. For a country like Nigeria that is having population growth of about 2.5%, a 3 or 4% growth will not even move a needle, because
All
based
right.
on Okun's law, for an economic growth to at least reduce unemployment, which is one of the major indicators of economic welfare, by an inch, your economic growth must at least double your population. So that means that if there will be any baseline growth, the Nigerians should begin to smile about the baseline, the floor. It should be 5%. Anything beyond 5%, below 5%, we are not pulling any weight. So over the last 2 years, there was a major negative, movement on exchange rate, on inflation. But in recent months, especially in the first half of 2025, there's been stability on the part of exchange rates, thanks to some of the policies of the central bank. I mean, compared to 2023, after the liberalization policy, FX rate lost more than 40% from 309 in the official market and about 600 in the parallel market. To initially, official rates moved to 907, parallel market by 1.2. Then it worsened. At some point last year, it was around 1,008. But we have seen not just a bit of recovery, but also convergence. But that is not enough because the average Nigerians are still feeling intense pain. Inflation has also been recalibrated, now at about 23 levels. But yet, ask an average man about inflation. They will give you the narrative that is in Todaro and Smith, page 32, that what you are seeing in their life, their poor food, their poor clothing, their poor shelter, reflects that there is still inflation in the environment. So that is the message we are preaching, that we should look beyond statistical gain. Yes, there are silver lining, but social strain must be addressed.
It's one thing to have all the statistics on paper. It's another thing when it comes to those who are living the reality. Thank you for that submission, Damilare. And you talk about the exchange rate stabilizing, which actually brings me to the US dollar. Now, it has actually seen some weakness in the first half of 2025. Now, how has that impacted stocks in the emerging markets?
Yeah, I mean, the impact was likely positive. For the market we tracked, maybe with the exclusion of Mauritius in H1, perhaps due to a bit of profit taking. The other markets, closed strongly in the green. The Nigerian market, for example, did more than 16%. Ghana market was up. Cote d'Ivoire market was up. South Africa market was up. It was good because what weakened the US dollar index? There are about three major factors that normally drive down the dollar index, which most times speaks positive for emerging market. One is expectation around growth. There were, even before the Trump administration came in and began to impose tariff on everybody across the world, there were probability that the US economy, given the inflation dynamics before, might witness that recession if care is not taken. So that's subsisting risk factor, coupled with the sort of aggression of the president when he was sworn in on January 20, post-January 20 tariff, trade strain, affected sentiment towards the US market. So the outlook for inflation was not, for growth was weakened. So that restricted investors from wanting to go to US at that point, because what's the sort of investing in an economy that is contracting? Your business is not likely to produce results. And again, the US Fed had cut rates before and were planning to cut more. So all those dynamics favored emerging markets where yield level were very attractive. Then coupled with the fact that crude oil price crashed, because one of the things that normally drive dollar price up is crude oil, because crude oil is traded in dollars. So when crude oil price is high, countries that want to trade, buy crude oil will need more dollar. And because of the force of demand and supply, the more they ask for the dollar, the more dollar will strengthen against other currencies. And the third factor is also an ideology we call de-dollarization. We are beginning to see some economic blocks trying to facilitate their trade without using the dollar, because that's what I given the US a sort of global power over the years. When every other country wants to trade with each other, they need the dollar. And so the dollar will always come in. US is like the de facto controller of the world. But we are seeing the BRICS, BRICS segment, which Brazil, Russia, India, China, and other new joiners, trying to facilitate certain level of trade without using the dollar. So when something that's enjoying monopoly is beginning to lose that force, the dollar will. So all this dynamic combined, plus attractive yield in emerging market where inflation is very important. In Nigeria, our monetary policy is about 27.5%. So, and our the yield on our instruments in real time is about 24.5%. So all this was supportive of capital flow. So basically, the shock or the weakness in the US dollar in H1 was positive for emerging markets, and it tells on equities performance. In fact, it also told on currency performance, because it's also one of the reasons why the naira stabilized and currency like that of Ghana strengthened significantly.
All right, interesting stuff there. Okay, now, Damilare, because of time, I'm going to ask you a two-in-one, so you have to do your best to squeeze everything in. First of all, GDP. Let's talk GDP now. Your forecast for Nigeria is at 3.3%, and that is actually unchanged from your prior forecast. What exactly is justification on that level? Then, talking about inflation, your forecast is also unchanged at 24.7%, remaining consistent with the numbers. Why exactly is that?
Okay, thank you very much. Starting with the GDP hold, we think it will be counterintuitive, so to say, to have jumped the gun. You recall, we made this projection December last year when we published our previous macroeconomic outlook reports, where we say, titled Beyond the Rhetorics, Turning Promises to Tangible Gains. So the analysis, the model, the forecast was based on the previous GDP computations and metrics. But late in December last year, around the time we're about to publish, the National Bureau of Statistics announced it will be recalibrating or rebasing the GDP, choosing another base year. Rebasing means that you are repricing, you are comparing your economic performance with a particular base period. The previous base period for GDP in Nigeria was 2010. So the NBS then said they will be changing it to 2019. So the base is changing. It should cause an increase in GDP. So the clarity we're expecting the NBS to publish the Q1 GDP at latest May rather, but they missed out on that window. So, and again, the more reason we have not even changed our forecast yet is that the NBS also announced that 8 activity sector will be added to the GDP. What their size will be, we don't know. And bulk of that 8 sector are the informal sector that were not captured before. So if you have a boss that can take 20 people, and you now say, you know what, you 20 people that are in this boss, I'm bringing another 20 people to join you. You don't make that boss will not be enough for them. You need a 40-seater boss. So because the NBS has not, give us clarity, it will be counterintuitive for us to make a projection in January. That projection has not been measured against anything. Then we are revising it. Revising it on what? The NBS has not yet played its own role, given us the size and other metric that is relevant for the rebased GDP, as well as the activity sectors that will be added to. So when we see that clarity, we'll be able to make better judgment and not mislead our followers. Now, on inflation, the NBS has rebased inflation, but interestingly, we have just seen more of realignment, moving certain parts to, from food inflation to core inflation. But on the balance of analysis, our model, even with the new CBA, NBS rebased indices, coupled with our assessment of macroeconomic dynamics and also domestic and global shock, when we assess the new data, the new CPI index in the light of our inflation expectation, we realize that there won't be any material difference in terms of average inflation rate of 24.7. Average means if you average January to December inflation for this year, it will still be around 24.7. And one of the reasons why we think that will happen is because there will be a major spike in December, nothing less than 10 percentage point. Even though inflation might fall between now till October, we're going to see a slight notch up in November and a massive jump in December, which by now you average it, it's still around 24.7% because of the rebasing that took place in December that put inflation, of course, that rebasing alone took out 10% from the inflation rate. The inflation was 34.8 in December, but by January, it has fallen to 24.8. So that 10% that was lost due to statistical adjustment would resurface in December. And which December is above 30%. Based on our simulation, we're still going to have an average for the year at around 24, 25 level. So basically, nothing has really changed. And like I said initially, what is more important is even how the economy perceive the inflation, how the citizens perceive it. Our average Nigerian now still feel price level still high and more needs to be done beyond statistical gain. we want social stream to be addressed.
Mm, very, very important. I mean, taking the 10% from last December and kicking it down the road to meet it in the coming December, that seems to be where we are headed at the moment. Thank you so much, Damilare, for that. Let me take a message very quickly before I wrap it up here. This is Gilbert Musa in Festac. He says, like Damilare said, we need to move and act beyond statistics. In my thinking, we should go back to the regions and implement policies used during the Gowon era to facilitate domestic growth, which will impact the average Nigerian. All right, Gilbert, thank you for your message as you always send them in. Very much appreciated. And once again, very big thank you to you, Damilare. I've been speaking with Damilare Asimiyu. He is a macroeconomic strategist at Afrinvest Research and Consulting. Thank you very much. And it's been a pleasure having you on the show.
It's a pleasure being here as well. Enjoy the
All
rest
right.
of it. Thank you.
And you too. And you too. All right, then. Lagos, Nigeria, the entire world, everybody's that you're listening to us. Thank you very much for being a part of Business Express this morning. It's been brought to you by IntoSwitch. Keep it tuned. The Smooth Breakfast kicks on. More great music your way.